Jonathan, we are very thrilled to have you with us today. So for everyone, the interview will be in English. We have prepared some questions for you, but just an information to all attendees, you can ask me in Polish or in English any questions you feel or like in the chat or Q&A part during the interview. Jonathan, okay, so we are in a hot season, I would say, for everyone who is responsible for reporting and ESG. In the EU, we are having a lot of changes every month. It's very hard, even for me as a consultant. We have the CSRD, the new directive. We have taxonomy. We have SFDR. We have a lot of changes, a lot of education to do. How do you evaluate these changes from your perspective? Do you think it will be a game changer for everyone, for the reporting?
Well, thank you, and thank you for hosting today's information session. It really is a great pleasure for me to engage with all your audience, and I look forward to the questions as well as they come through. Yes, I do believe that what we're seeing, not only in the European Union, but I think globally, is a game changer at the moment. And the way I would describe it is I think that we are at an inflection point in the global corporate reporting disclosure system, where it looks as though we're going to, in pretty fast order in comparison to how these things develop normally, move to having a global system of baseline standards for sustainability information that will be comparable to IFRS, so comparable to financial reporting standards. So you'll have a baseline of international standards that will then be complemented by regional standards that respond to the specific needs. For example, in the European Union, the Green Deal, and the other political priorities that the European Union has prioritized in respect of environment and social and governance matters. And so I think that that is the journey that we're currently on, and it's a really exciting journey. And the benefit of the European Union playing a global game and fitting into and being part of a global system is that that's where you get the potential for this being a game changer, because you get the opportunity for creating one international system. And when you're a business that's looking both to simplify your reporting by creating efficiencies, because you've then got a global system of standards rather than a patchwork of different standards. And secondly, from an investment perspective, you've now got a global pool of international investors who are looking for a single set of standards that can be applied on an international basis. I think the opportunity to create this global system, yes, with regional variation because there are specific priorities in the European Union, but I think that is the prize at the end of this journey.
Okay. And do you believe, because if I understood, it's a big change for capital markets, but will it be also, it's a change for game changer for fighting against climate change?
It's a huge game changer for fighting against climate change. And I'll tell you why, because up until now, and I've been involved in the corporate reporting and sustainability and finance world now for a long time, up until now, finance and sustainability have been separate areas of a business or of the conversation that we have. When I joined the IRC 9 years ago, quite often sustainability reports in companies would come out later than the financial statements of the business. So if you're a stakeholder or an investor, you've no idea whether the board and management of the company is taking these issues seriously, whether they're being embedded within the strategy and the business model of the organization, because the information is being prepared in a silo in a business, and it's being released separately from the corporate information that investors use in order to allocate capital. With the developments that we're now seeing, there is an integration of financial information and climate information in particular. So now the finance managers of companies and the financial directors of companies will in future have on their screen the financial implications of economic issues. So, you know, whether that's interest rate decisions or whatever, but you'll also have the financial implications of climate change and climate risk. And that will be embedded within the financial considerations and the economic considerations of the business. So then you get changed business models, you get new products and services, you attract new customers, you attract new investors, and you grow your business. You grow your business in a sustainable way. So what we're now seeing, I think, is that previous separation between financial reporting and sustainability reporting, we're now seeing an integration so that the world grows and businesses are successful, but they do so in a sustainable way.
Okay. Yeah, sure. Yeah, sure. And we have also another question, because some of the companies from Poland are, of course, using the integrated reporting standards. Some of them are just in GRI. We are also looking a little bit what is happening right now, the changes, the new expectation. We don't know yet in what kind of standards we'll be doing the reports for 2021. But from your point of view, can these changes mean that, for example, integrated reporting standards will be more, I would say, popular or more used in companies in Europe or less? Because you are, of course, like Liliana said at the very beginning, you are merging, you have merged with SASB. So it's a strong thing. But what do you think what will happen in Europe?
Well, the integrated reporting framework sets out, as the businesses will know on the call, a set of business principles for reporting. So the integrated reporting framework is not itself a standard or a set of standards. It is a set of principles that help companies to explain how they're creating value or how their businesses are eroding value or preserving value into the future. So for now, a lot of businesses, they've had the rear view mirror. They've been able to report what's happened in the past, and they've been able to quantify that and use financial metrics in order to explain how value has been created historically and get assurance on that information. What we're asking businesses to do is look into the windscreen and look into the future and think about how the trends that are impacting the business today or the sector today or the market that you're operating in today, how that is going to affect your business model and your strategy, and how you as a business are preparing for that. And that may mean that you have to think about the different resources that you're using as a business in order to create value. So you might be, of course, using financial resources and manufactured resources, but you'll also be using human capital. You'll have people. You'll be using intellectual capital, the IP, the patents and copyrights that you're using. You'll be using, of course, natural and social capital as well, the relationships and the social license to operate. And all of these issues are future oriented. They're issues that over time change and evolve and grow and deplete. And the integrated reporting framework helps a business to navigate that long-term future. Because what we want to get to is a situation where businesses are not just communicating about what happened in the past or what is going to happen in the very short term, but we know that we've got these systemic global challenges that we're facing, and all businesses are facing them to a greater or lesser extent. Digitalization, climate risk, inequality. And we need the systems and tools at our disposal within businesses to navigate that landscape. And that's what the integrated reporting framework helps businesses to do. So as the European Union evolves the basis of standards that expands the scope of information that it wishes businesses to talk about, the integrated reporting framework becomes more relevant because it helps the business to navigate that system and to broaden the base of information, but to communicate it in a way that's relevant to investors, capital providers, and other stakeholders as well. And the SASB standards are standards that are industry specific and are relevant to enterprise value. So they are relevant to the investor audience, and therefore they complement the principles in the integrated reporting framework.
Okay, okay. So having in mind that integrated reporting standards merge with the SASB and you have formed the Value Reporting Foundation, we have a question on this specific topic. Where in the standards landscape is Value Reporting Foundation? Taking into consideration, of course, the EU planned reporting standard and IFRS initiative. What distinguishes the Value Reporting Foundation from other standards? If you could explain us.
Yes, absolutely. So in short, the Value Reporting Foundation will be providing the corporate reporting principles, tools, and standards that are relevant to an organization, to a business, communicating its value creation story to its providers of financial capital. So essentially to its investors, about the enterprise value creation process of the business. So in other words, at the moment, if you just communicate the value of your business, looking only at financial standards, financial reporting, you'll be communicating about 20% of the value of your business, because today only about 20% of the value of a business is really accounted for by the financial standards, the financial reporting standards. Yeah. Around 80% of the value of business today is accounted for in its brand and its intellectual capital and its impact on society and the environment and on consumers and all of those future issues that I was speaking about. So what the standards, the SASB standards and the integrated reporting framework do is they close the gap between the book value of a company, you know, looking at the business just through the lens of financial reporting, and the enterprise value of the business. So how does an investor look at your business and value all the different components of value, not just your financial value? So that is what the Value Reporting Foundation is aiming to do. It's aiming to provide the standards, the framework, the tools that help businesses to think about the enterprise value of the business. Now that is different from GRI standards and some of the work that the European Union has been doing, because what they're doing, their universe, if you like, is broader than the capital markets. They're looking at the impact of a business on the environment and society. And from a perspective of transparency to stakeholders that are beyond the capital market stakeholders, so NGOs and other societal stakeholders, what is the impact of the business and how do you quantify that impact? Now, some of that information will be relevant to providers of financial capital and will be relevant to the enterprise value of the business. But some of that information that's on broader impact will be relevant to policymakers and to regulators, and it will help inform public policy decisions. So there is a distinction between the information that is relevant to capital markets today that investors are using in order to determine the enterprise value of a company, and we are providing the standards and the framework in that respect, and the broader universe of information that is useful to a broader range of stakeholders, and in particular, it's there and used to inform regulation and how regulation is designed for the future. The macro issues in an industry where an individual company may not wish to or may not be able to address climate or environmental issues on its own, but in aggregate, a government or a policymaker can say, actually for this industry, we need to be providing more subsidies or more imposing more taxes or more regulation. That is at a macro level, looking at the impact. What we're looking at is really framing the conversation around what the enterprise value of the business is, help investors, providers of capital, to get to that understanding using more than just the financial statements.
Okay, so we have some question coming in. but it's actually the next question we're having. From your global perspective, your experience, how do you see the future of sustainability and ESG reporting in the world on a global level? What trends, in your opinion, are really worth paying the attention to?
Absolutely. Well, we're seeing three really big shifts at a kind of concept level. The first is we're seeing a big shift from short-termism in our capital markets to long-termism. Investors now, whether it's the largest investors in the world, right the way through to sovereign wealth funds, development banks, all the major pension funds in the world, are wanting information that is now about longer-term issues and how businesses are being resilient. And I think in many ways, we've not touched on the pandemic yet, but in many ways, the pandemic has highlighted the importance of business resilience and being able to adapt very, very quickly to new situations. And the only way you're able to adapt to new situations is if you have a business model that is robust and clear, that your stakeholders understand, and therefore they trust you as a business, and you are thinking about the long-term issues that are facing your business and your stakeholders. And so the shift from short-term thinking to long-term thinking is a major shift and trend that we're seeing in the world. The second trend is a shift from financial-only reporting to multi-capital reporting. So we're moving from a situation where historically, when you look at a company's annual report, you open it up and you just see a myriad of financial data and financial performance. Now you're seeing a much greater blend of information, which helps stakeholders to really understand how the business is preparing itself for the future using human capital measures. So, what is the employee engagement score of your business? How are you thinking in terms of intellectual capital and attracting and converting patents into financial performance? How are you using the brand of your business in order to drive performance in the future? So having those non-financial, if you like, in inverted commas, metrics alongside the traditional metrics is creating a more multi-capital way of understanding value creation. And then the third trend that I would highlight is a move from silo reporting to integrated thinking and reporting. And this is really the principal governance concept of our time, which is moving away from specialist departments in companies only reporting internally to themselves and having a very silo way of thinking and decision-making, even having strategies for individual departments within companies. So now having a much more structured dialogue between departments within companies. So you'd bring together the head of finance, the head of strategy, the head of HR, the head of internal audit, the head of sustainability, and you would determine one strategy for your business, one business model, and then you would have KPIs for the business that would cascade through the organization so that you no longer have this silo-based decision-making and thinking within organizations. So the end of silo thinking and reporting and more integrated thinking and reporting, I would say, is the third really big trend that we're seeing in the world. And that is coming about now through the work that you referred to with the IFRS Foundation. What they're saying is that we can no longer have financial reporting and sustainability reporting in silos, and that we think that they are the organization with the global credibility and ability to scale up action to develop a global baseline of comprehensive sustainability standards that are going to be relevant to all the global capital markets of the world. And we're expecting some pretty significant announcements to come out of COP26, the climate talks that are coming in November, about the work that is ongoing today. And the Value Reporting Foundation has a seat at the table from day one as part of the technical working group of the IFRS Foundation as it develops this work to develop a global standard for sustainability reporting in the future. So they're the global trends that I think every business should be aware of and be prepared for. And then from a standards perspective, what to look out for is the work of the IFRS Foundation, and allied to that, the work of IOSCO, the global regulators for the capital markets, because they are looking now at this work, seeing whether they can endorse it through regulation, because that will scale up the adoption of these standards in a very, very fast way. And going back to the beginning of the conversation, we are seeing action in this area now happen in a space of weeks and months, whereas in the past, we'd be talking about 2 or 3 years for progress of this scale and magnitude to be taking place. So to have the opportunity to talk to businesses today and brief you on the very, very fast-moving developments is really quite important. And I'd be delighted, of course, to answer any further questions.
Okay. Well, it's really interesting, this global view. We have some questions, but before we move on, we have in Poland many companies that are quite advanced on ESG and sustainable practices in their reporting, but still, you know, we meet some companies that are not fluent, let's say, in this topic. We have, or sometimes, you know, ESG managers have the feeling that they don't have the, they're a little bit underestimated in companies. We also work sometimes with clients when the management board is not so convinced of ESG. So from your point of view, what arguments an ESG manager should use to convince the management board about having a real, not ESG policy, but an ESG strategy for the company? What arguments would you use?
Absolutely, and I would go further and say that ESG should be part of the core strategy and business model of the company, and that is when you really get the benefits of sustainability information, because it powers the performance of your business. So I think we have to stop thinking of ESG and sustainability as separate from the overall core strategy and business model of the organization. In future, and the businesses that are doing this are powering forward in terms of growth, because they're seizing opportunities of new business models in an age now where we're wanting to see new ways of doing things that are sustainable, that meet the sustainable development goals, and that this is where the growth opportunities now are coming from for business. There is a compelling business case for adopting ESG, integrated reporting, integrated thinking. Mm-hmm. Climate risk and climate opportunity is possibly the biggest megatrend, along with digitization, that we're seeing in the world today. And actually the two are complementary. There is a business case for businesses around the world. We know that businesses that are adopting integrated reporting and adopting ESG metrics and embedding and integrating those metrics within core decision-making are attracting long-term investors. Harvard Business School has done a study showing that overwhelmingly companies that are adopting these practices are deterring short-term traders and are attracting long-term investors, because they understand more about the risks and opportunities that the companies are facing. We know that companies that are adopting integrated reporting, integrated thinking, and ESG metrics benefit from a lower cost of capital, because it reduces the risk of lenders in the business model and understanding the business resilience of the organization. Mm-hmm. I was in Malaysia a couple of years ago speaking to Petronas Gas, one of the biggest companies in Malaysia. And they have been practicing integrated reporting for a number of years. And they were looking for a loan, a normal kind of loan for their company. And they got a lower rate of interest on that loan from a Japanese bank because they were practicing integrated reporting. And they stated that in their decision to offer them a lower rate of interest, because the bank that was offering the money had a broader range of factors to actually understand the business. And it therefore reduced their risk. And it also improves performance, share price performance. There are studies looking at the South African market and APAC, the Asia Pacific market, looking at companies and comparing companies that have adopted integrated reporting and ESG practices and companies that have not. And overwhelmingly, the companies that have adopted these practices benefit from a higher share price over time. So there is the business case There is the consumer case. Just look at the next generation of consumers for your business products and services. Deloitte every year conducts a survey of millennials, 37,000 millennials. And in an overwhelming sense, those millennials are saying that they will only invest in and buy products and services from companies that share their values. And their values are about looking after the future, looking after our planet, being socially and culturally aware of the surroundings around you. And critically, HR departments are telling us that when HR teams are interviewing potential candidates for senior roles in companies, increasingly, it's now a two-way interview. It's often the candidates interviewing the companies as well to make sure that the companies are the kind of companies that these high caliber, high quality candidates actually want to work for. We're in a race for talent, and differentiating yourself through the strategy that you deploy and the reporting to showcase your business to the world, including the future talent, is a way of attracting high quality people and differentiating yourself in the market. Final point, because they are carrots, they are things to really inspire you into action, but the stick is just look at the regulatory trends in the world. Look at what is happening with IOSCO, look at what is happening at the European Union level. The regulators now want to make sure companies adopt these practices, and if businesses do not adopt them and get ahead of regulators, regulators will come and impose regulations that are not business friendly. And we really do want to avoid that. We want to avoid having that kind of dialogue with investors. We want to be going to regulators. We want to be going to regulators and demonstrating the best practice of business, because we understand that there is a business case. We understand that there is a consumer case. And most importantly of all, in this world today that we're facing, with climate risk and with pandemic risk and with inequality risk, we understand that there is a public interest case for moving and shifting the way we think about value and the way we report on value to all of our stakeholders, but also bringing investors in as well, so that they can allocate capital to the most sustainable and long-term businesses of all.
Wow. Well, thank you. That's very very practical information for anyone working inside a company, I think. And referring to what you just said, we have also a question. What in your opinion will be the most important for investors? So let's take the other side. Within the upcoming 2 years, for example, what will be the most important for them, for investors?
Well, I think what investors are now looking for, they're looking for a single set of global standards on sustainability information. And they're looking for that to be connected to the financial statement. So if you look, for example, we've avoided using the alphabet soup here, but if you take TCFD, which is the Task Force on Climate-Related Financial Disclosures, it's very likely that we're now on a road towards mandatory TCFD reporting in the world today, in the sense that really this is a matter now of core financial and risk management within companies, because we know that climate poses a risk to our economies, whether it's in, at a macro level, extreme weather events, global warming. We know that it impacts specific sectors, look at the insurance sector, for example, in terms of insurance risk and so on. Look at consumer-facing industries as well. And we know that there are financial implications of climate risk into the long term. So I think we're looking now potentially at a road towards mandatory climate-related financial disclosure. And that will be the first set of standards that the IFRS Foundation, under its new International Sustainability Standards Board, releases in the short term. So I think that will be the next phase, if you like, that investors are both requesting, and I think will also be provided to them, are those standards on what the financial impact performance impact of climate risk is on your business, but it has to be integrated within your existing financial reporting systems and your risk management systems. What they're not looking for are separate TCFD disclosures. They're looking for disclosures that are absolutely embedded within your core disclosure so that we can see the impact on your strategy and on your business model into the future.
Okay. Okay, so just to sum up what you just said, from an investor perspective, within the next 2 years, every company should really do the TCFD and present all risk related to climate change. That's a crucial, in your opinion.
That is crucial. And of course, TCFD isn't a standard. So it is a series of recommendations. So they recommend doing things like scenario analysis. So taking a certain degree rising temperature and then doing scenario planning and thinking about your business model. The standards that support that will be we think the SASB standards. As part of the Value Reporting Foundation, we will offer 3 resources, if you like, to the market globally. We will offer the integrated reporting framework. We will offer integrated thinking principles. We will offer the SASB standards. Now, at the moment, they are all being developed out of robust technical processes, and they are staying as separate themes, if you like, under the umbrella of the Value Reporting Foundation. But what we want to demonstrate over time is how companies that are using integrated reporting can also benefit from using the SASB standards and how they work together. And similarly, SASB previously and GRI did a piece of work looking at how GRI and SASB standards fit together. So we're trying to get to a world of interoperability where the different standards that meet different needs actually work in a more interoperable way. But from a TCFD perspective, we think that the integrated reporting framework and the SASB standards are a good fit into that philosophy of understanding what the financial impact of climate risk is for a business, because they really are the standards and framework that are looking at what the information that's relevant to investors. Okay.
Okay, thank you so much, because this is a topic that is not always very clear, and I think your global view on this on the global level is very interesting for everyone. I would like to maybe ask, do you have any questions, our attendees, any questions? Maybe there's a topic you would like to hear about. I'm just looking at the chat right now, but I think we had a question also. Someone asked for better understanding. Will integrated reporting standards in the future might be a global reporting standards? But I don't know if you would like to comment on this, or Jonathan?
Of course, yes. So integrated reporting and our framework that we've developed is already a global framework, and we think it's universal. Actually, it applies as much to smaller and medium-sized companies as it does to the larger listed companies. It applies to private companies. We've got a lot of private companies that are adopting the integrated reporting and integrated thinking principles. We think it applies to the public sector as well. In fact, in many ways, very, very appropriate to the public sector, because you start from a perspective of having a broader set of stakeholders. So you need to be able to really understand and build that into your business models to attract the support of those people, the taxpayers who are funding you. So we believe that we've developed a universal set of core corporate governance and corporate reporting principles that are globally accepted. We're working with the RFS Foundation very, very closely as the Value Reporting Foundation. Try and make sure that some of the principles of integrated thinking, the core concepts of integrated thinking and reporting, are included in the design of the new global system. When the RFS Foundation comes out with its standards in the future, it will embed that concept of kind of multi-capital thinking. So when we talk about sustainability, we also think not only of ESG, but we also think of intellectual capital and human capital. We think innovation is absolutely essential to the transition to sustainable development, because that's how you get your new business models. how you get your new thinking. That's how you get the growth and the development. So we can't think of sustainability just as ESG. We've got to think of sustainability as the breadth of value creation, because that is how you're going to power the transition at speed to integrated to sustainable development. If you don't have the innovation, then you're missing a very, very key accelerator to this transition to sustainable development. So we think that our principles and the concepts of integrated reporting and our framework have a significant role to play in the design of the global system that is underway at the moment.
Wow. Okay. Jonathan, I think it's a really great word, innovation, to end up our interview, because I think every crisis, every pandemic, every change brings innovation, indeed. I think innovation will be also in ESG, in sustainability. I see for now we don't have any other questions than these that were during the interview. So I think thank you very much. I know you have another meeting and you have to run very fast. All your comments were really valuable. So thank you very much.
Thank you very much. And I'd be delighted to come again and speak to the audience again in the future. Thank you.
Okay, thank you.